Hey guys, Frank Curzio here. Another live video for you. Feel free to email in whatever you want or to make fun of these live videos. I just like doing them. It just gets my thoughts off my head. So I'm just going to ramble out a couple of things about oil, guys. But if you want to email me any questions, it's frankcurzioresearch.com. Feel free to email me. But we all know that oil prices are crashing right now. We all know why. If you don't, you can go and look at Google, look at the news of Saudi Arabia and Russia and, crashing oil prices. The next step for you as an investor should be, how do I invest in this sector? Some of these things you thought were buys maybe 2 weeks ago, and they're down 25, 30% from those levels. They're probably down 70% plus if you look at this year. A lot of companies are in big trouble here. So I visited every single major shale area. So that includes the Williston Basin, the Eagle Ford, the Permian. I visited them personally since 2011 to really understand the shale revolution. And I can tell you, at current oil prices, none of these guys make money. Okay, very few, maybe in the Permian, can produce at $30 a barrel where it is right now, but that's only in like a 4 county out of whatever 25 counties it is. So it's very limited there. But most companies can't. If you look at the average price in Williston, it's about 45, so that's in North Dakota. The Eagle Ford's around 40, 42, 43, and in the Permian is around 37, 38. It could be as low as 30 for some companies. Very few of them. So at current oil prices, you can't make money. Now, when you look at this sector, it's very important to understand hedges, because what these companies do, just like Walmart does, just like FedEx does, anyone that has a large fleet, they lock in prices, right? So they lock it in and hedge them because it allows you to forecast your business, right? It's hard to forecast if one of your largest expenses is fuel, like with the airlines, and you want to lock in that price for a year, 18 months if you can, 2 years if you can. This way, no matter where prices go, you're kind of locked in for most of your production or whatever. So this way, it's very easy to forecast. It's very easy to have a marketing budget, advertising budget, when you don't have to worry about oil prices going up because it's so volatile. In the oil sector, we have 41%, I believe. I think it's around 41, 42% here. It's actually okay. So it's 43% of the production that's hedged in 2020. So what you want to do is find companies that are hedged. The average price they're hedged for is $53. I won't get too technical. They have collars on this, which means if it goes lower, they might have to lower that a little bit, and has gone lower. But still, you have collars on it, so you're good. They're hedged. But the average hedge is around 53, 58. Remember, with $30 a barrel, that means as they're producing, people buying them for around that price. That's very, very good. 43% of production is hedged. You want to look at companies that have hedge exposure. You can go into the actual companies and look on their website, go into investor relations, go into their presentation. A lot of them talk about it there. I will go over the companies who you really have to worry about. Continental is one of them. If you're looking at Apache, they don't really hedge, which means they're going to get crushed. If oil prices go higher, these are companies that may go 2x, 3x, 4x higher than the average company. They're going to have more beta. On the way down, they get destroyed. So, because they're not hedged and they can't make money right now, and they have debt. So this is one of the most debt-laden industries. You got to be very, very careful. Now, here's the thing, guys, is very important. Another one. I don't know if I'd short it here because it's down so much. Cullen Frost has some of the biggest exposure to oil loans on the bank side. Some of the other banks have, if you're looking at the actual amount, it's a lot. The major banks, if you're looking at a percentage, is not that much. We will get some kind of bailout, I think, in the oil industry and also the cruise industry. That's another video that might stabilize, and maybe they don't have to pay off their loans right away. This is the key thing you guys need to understand. I'm going to post this in a couple minutes on my Twitter, this chart. I can post it here. I'm going to post it on a chart. So as 2020 production this year is hedged, 43% is hedged at $53.58. Next year, 2021, 2% of global oil production is hedged, only 2%, which means I'm under the belief that this is going to snap back because so much supply is going to come off the market because most people can't produce right now. If this lasts into 2021, and believe me, the Saudis, Russia, all of you guys know are hedging, how much the percentage of hedge for global companies. If it lasts into next year and only 2% of total production of these E&P companies are hedged, you're going to see a massive, massive fall. This is going to look like a joke. This is going to look like nothing if this lasts into 2021 because none of these guys are hedged. So basically, you got to produce on the spot market and you can't make money. It's like trying to produce a product and you can't make money on it. You have to stop producing it, right? You just have to. It doesn't make sense economically. Where your hedge is in place, that helps you out. With this, it doesn't help you out. So I didn't mean for this video to go that long. That's where I'm looking. If you're going to look at my newsletters, I'm going to provide Curzio Research Advisory, Curzio Venture Opportunities, provide a list of stocks. Again, this is free. Those people pay for my stuff. There's a reason why they pay for this stuff. A lot of them have been out of this market during this downturn. And now we're looking at how to capitalize because we're getting close to a bottom. We're not there. We're not there yet. I've been telling people to continue to avoid the market. I still want to get a picture on earnings, which we don't have. But right now is what I'm doing with my clients, what I'm doing with myself, is looking at the pockets, the areas, what stocks sold off more than the market, which ones are going to be best positioned for the bounce back, because the market will come back, right? This is a temporary problem, and oil will bounce back as well. It's just a matter of time. Hopefully, it doesn't last to 2021, but I'm looking at different sectors. Right now, it's oil I'm focusing on. I'm looking at the companies that have their most oil production that is hedged this year, because those profits are not going to be impacted, and their balance sheets are going to be in much better shape, I think, than everybody else. And that's going to give them an opportunity when a lot of these companies go out of business to purchase assets very, very cheap. Those are the companies you want to own for the next 5 to 10 years. So, if you're subscribers, you're going to be seeing that information shortly. And everything else, keep tuning in, guys. Love all the support I'm getting, and I'll report back to you guys soon. Take care.